Hi, fellow traders. I hope everybody is enjoying their weekend. I wanted to give you kind of a sneak peek into the day trading the average Joe way class. We have a new one starting up in about a week or so on April the 18th, and we're well into the previous class that started last month. So we're clicking right along, but I wanted to kind of share with you and give you some insight into the class and what you'll be learning in it. It's 100% live interactive class. Yeah, you get recordings after the fact, but the first class is always going to be live. It's always going to be interactive, meaning you do have a microphone so we can discuss things, if you want to use it. Some people are shy and they don't want to talk, or whatever. But if I can go to Mexico and talk Spanish with my southern accent and not worry about it, y'all should be able to talk no matter what your accent is. So, that's there. I like interactive classes. I like to hear students' thoughts and comments and critiques. I mean, it only helps everybody and benefits everybody in the class. So I love the interactive part, the nature of it. It's broken down into 15 90-minute classes. It's one class a week. The reason why I do that is because whatever we go over, you need to have time to practice and you need to have time to let it sink in. And this is not a rush. I'm not going to sit here and tell you you'll be a trader, profitable trader once you finish the class, because it takes a lot more than that. And a lot of people tell you take this class and in 90 days you'll be a successful trader, or you'll have all the tools you need to be a successful trader. And that's just not true. I mean, I can't even tell you whether it's 6 months. No, it took me 8 months before I started becoming profitable. And that was making anywhere from $35 to $75 a day. That's where it had to start. But that was from me making, taking losses every day and averaging a loss every day to making a couple of dollars. But I knew that until I learned how to make a couple of dollars and be consistently profitable every day, I couldn't make any serious money and I could never make a living at it. So that's what I try to teach you. All you have to do is trust the process and you get there. Everybody that has trusted the process and has done what I asked them to do and what I tried to teach them to do, they've shown and experienced some success. Now, some of them have tried to move too far too fast and ended right back up in the same spot they were in before. But the good thing is they had developed the skill and they knew how to go back and trade small and start getting their consistency back. And that's what it's all about. Um, it's limited to 25 traders per class, but honestly, I get no more than 15, and some of those aren't able to be in class all the time. So it ends up we have anywhere from 10 to 12 people in class every time. And so I can answer every question. I can explain everything. I can take the time and do it. And if you've been in my classes, time is not a factor to me. Because like the last class Saturday, we were in there, I know, over 2 hours. So time is not a big thing. I want to make sure you get it, you understand it, and that you're ready to practice what we went over in class for that week. You get a yearly chat subscription with it, where you get the weekly webinars I do. So that's an extra class you get a week. I have twice a month mentoring, small group mentoring. You get a part of that. You get to be a part of that. I've got access to a market replay platform that allows you to go back and replay the market and helps you learn price action. And you also have lifetime access to the classes. So once you finish a class, you can always join in. If, let's say you're in one class, let's say you're in my Saturday class, and I have another class going on Tuesdays, you can always come in on Tuesdays and retake a class that you've taken in the past. That option is there for you. Once you're in, and once you are a part of the system, you're mine. And you're gonna have access to pretty much everything. It's all about learning. That's my number one focus. I have a passion for teaching, and I like to see people learn. I like to see and feel that light bulb going off, and I like to see people reaching their dreams. You may not get it the first time. You may not get it the second time. You know, a dream deferred is not a dream denied. So just because your dream is deferred and it's put off for a little while, that doesn't mean your dream has been denied. That means you have to go back and work a little bit harder to get to the next level. And that's what I do, and that's what I help traders do in this class. So how much is it? $9.99. And you got to think about how much time you get and what you get with the class. You're not getting a video that you have to watch by yourself and then email questions to see if you get them answered. The classes are live, or if you do miss the class that day and you have to watch it later on, you're not going to have to wait 12 or 24 hours to get your answer. I'm monitoring my email all day. You know, people that have emailed me, that have asked me questions, you know, unless, you know, an event happened like this past week, I'm always there. So just know that when you sign up for this class, you know, you signed up to me. And I'm going to, you know, be dedicated to making sure you learn everything that you want to learn and you get everything out of this that you need to get out of it. So if you're interested, just go to AverageJoeTrader.com, look on the services page, and you can sign up for the class. So just sit back and relax, and you can watch this excerpt from one of our classes. I think it's about 30 minutes long. So just sit back and enjoy it. And as always, if you have any questions, email me. I'll be glad to answer them. All right, so we're getting into the foundation of my trading with support and resistance. And it's not just drawing the lines on the chart. You know, it's a lot more than that for me. Even though that's what you see on the chart, that's the end result. But it's a lot more than that. So, and like I said, it's two of the most highly discussed attributes of technical analysis, and they're often regarded as a subject that's complex by those who are just learning to trade. You know, a lot of it, you hear support and resistance, and you try to learn it, you watch videos on it, and you see different people doing different things. So it becomes one of these complex things that sometimes you say, well, I don't even want to spend time to learn that. And you know that it shouldn't be the case. And that's why I'm breaking this down and explaining to you how I use it. Everybody uses it differently, and you're going to see different ways presented here on how to use it. Because you want to have a well-rounded foundation on support and resistance. You know, at first the explanation and the idea behind identifying these levels sound real easy. You know, I can make it seem easy, as I said, by just drawing lines on my chart. You look at me in the morning and I'm finding um, pivot points on the daily chart, and I'm using them as support and resistance. But it can come in various forms. It's not just those lines. Um, and it's a little bit more difficult to understand and to put in perspective than it kind of first appears. But the time has to be put in to understand support and resistance. If you're a day trader, and you're going to need to understand support and resistance. Even if you're a scalper, it kind of comes into play. Not so much for me as a for the trend traders, but it's more of it's still important either way. You know, no way to kind of get around that. All right, support and resistance, they represent key junctures where forces of supply and demand meet. All we're looking at in the market is supply and demand. Supply and demand and human emotion. That's what we see in the market. And anytime we get to these zones or these areas, I call them a supply zone, because you're gonna have buyers and sellers sitting there waiting to fight each other to see who can do the best. They're just sitting there, and you can see that in level 2 and time and sales. Really, like I said, the example I was showing you just earlier this morning on AAOI, I didn't have indicators. I didn't have level 2. I was able to determine the supply zone by just watching the price action, by watching level 1 and time and sales. That's all I needed to determine whether I had a good trade going or not. And you can see it was a solid trade. So I found a supply zone. In a supply zone, you're going to be able to tell when you're hitting that zone when you get more activity in time and sales. If you're watching level 2, you see more activity in level 2. So what is support? Support is the price level at which demand is thought to be strong enough to prevent the price from going down. That means you have more demand. People want to buy it more than people want to sell it. And so that's going to drive the price up. That level that it hits is going to be the support. As the price drops towards support and gets cheaper, buyers become more inclined to buy, and sellers become less inclined to sell. And that's going to change the direction of the stock. Now, by the time the price reaches that support level, it is believed that demand will overcome supply and prevent the price from falling below support. And that's what we see when we're watching for a stock to hit a level for either a reversal, because all my reversal trades that I take, they're going to be off a level of support or resistance. A bottom reversal will have to be off a level of support. No way around that. No if, and buts. It's going to be on a level of support. So as here we go. And this is AAOI. This is the daily chart. And this is showing you these lines that I've drawn already. These are support and resistance. And what I'm looking at here's support. This stock has tried 3 days to close below this level here for 3 days. So to me, this is a strong supply zone. And what's coming in here, it's around the 50-day moving average. So that's a solid level of support here. Okay, so support does not always hold, and a break below support signals that the bears have won out over the bulls. So if we break below support, the sellers, the bears have won. We're moving it down. A move below support indicates a new willingness to sell and or a lack of incentive to buy. That means the buyers aren't interested and the sellers are having to drop the price to get them to come in and buy them, entice them into buying this stock. Support breaks and the new lows signal that the sellers have reduced their expectations and they're willing to sell at even lower prices. In addition, buyers cannot be coerced into buying it until the price declines below support or below a previous low. Once a support is broken, you're going to eventually run into another support level that's going to have to be established at a lower level. You're going to find more support at some point. I mean, that is one of the things that's going to happen. You're going to find support somewhere. It's not going to go all the way to zero. All right, so where is support established? Support levels are usually below the current price, but it's not uncommon for a stock to trade at or near support all day long. It's not uncommon. That's why there are more stocks that trade like that versus that trade with movements we can trade. That's why we use our scanners. We're trying to find stocks that are moving, that are in play, that have volume. And if it doesn't have volume and it's not in play that day, it's going to trade near its support or resistance the whole day. Now, technical analysis, again, is not an exact science, and it's sometimes to set exact support levels. And that's why we call them zones. We look at a zone as 5 to 10 cents above or below that level. In addition, price movements can be volatile and dip below support briefly. Sometimes it doesn't seem to be logical to consider a support level broken if the price just closes below it. Does that should sound familiar to you? That's why I always say I don't put my stop exactly on a level. It's always going to be 10 cents above or 10 cents below or somewhere like that, because I'm establishing a zone. And I know that sometimes stocks will go back and retest that level, that technical level. And if your stop is sitting on that level, or if it trades just above it, it could stop you out, and then the stock will pull back and make the move. So you have to consider each support or resistance not just as a level or just a specific price, but as a zone. All right, so resistance is the price level at which selling is thought to be strong enough to prevent the price from rising further. As the price moves up toward resistance, sellers become more inclined to sell and buyers become less inclined to buy. It's probably reached a point where it's too high and it's running into resistance, and buyers do not want to buy close to that resistance zone. So by the time the price reaches that level, the supply will overcome the demand. That means there'll be more shares out there willing to be sold than bought, and the price is not going to go above that resistance, and it will start to fall. All right, resistance does not always hold and break above, just like support, just like we said. And this is just the opposite of what we just talked about. It's just the opposite of the support. If we break resistance and we break out the new highs, that means buyers have a higher expectation of this stock, and they're willing to buy it at higher prices. Okay, once resistance is broken, once we move up, there's going to have to be another level above it that we're going to be looking at. And a lot of times, that's going to be my next target. If I'm in the trade and I want to get profit, that's going to be my next target. So where's resistance established? They're usually above the current price, but like I said, it's not uncommon for a stock to trade near it all day long. The price movements can be volatile and rise above resistance briefly and pull back. Because what happens, you have a lot of breakout buyers sitting there waiting to buy it when it breaks over this resistance. Let's say the VWAP, since we just talked about the VWAP previously. If you have buyers sitting there waiting to buy a stock when it breaks over VWAP, it gets bought, you get a spike over VWAP, and if there's not enough momentum there from the buyers, it's going to fall. Because you're going to have people who were already in this stock waiting for the quick pop above VWAP, and they're going to sell it off. And if they outnumber those that are buying on the break, it's going to, it's going to fall back. And then those guys that bought on the break are going to panic, and they're going to start selling, and it's going to cause it to continue to move down. So these are things that I look at every day when I'm looking at my trades. And it's why I don't set my stop on a level, because I know what can happen. All right, so we're going to look at some methods to establish support and resistance, and we're going to look at a chart or two that's going to help you understand what I'm looking at. And we may run over a little bit today, but I definitely want to cover as much of this as I can, because the next class I really want to get into our strategies and applying everything that we've learned for the last 3 weeks. Support and resistance are like mirror images, and they do have common characteristics. Now, the most common way of establishing support or resistance levels is marking the highs and lows. And I simply choose the high and low points of a stock where it changes direction, and I call those pivot points. That's where a stock pivoted and moved down in the other direction, and then when it gets to the bottom, it's going to pivot back up. Those are the points I mark for my support and resistance. And let's look at a chart here. And that's what we see here. What I've done is I've marked the highs and the lows of each move here. And you can see these creates our support and resistance lines. That's my simple way of doing it. Every morning, this is what I do. And I draw it out, and I switch over to the 5-minute chart, and it's going to show me where the windows are intraday. What windows do I have to trade within that day? And it's just a simple way of marking these levels, marking the highs and the lows. All right. Now, another way is support equals resistance. Support can turn into resistance and vice versa. And this is usually done, I look at this intraday more so than anything else. But we'll look at an example on a daily chart because sometimes it's easier to see. But once the price breaks below a support level, the broken support level turns into resistance. The break of the support signals that the forces of supply have overcome the forces of demand. Therefore, if the price returns to this level, it's likely to be an increase in supply, hence it holds as resistance. All right, so let's look at a chart here. Here is where resistance turns into support. So we've got resistance here where the stock hit this 2230 level and pulled back. We tried it again and we pushed through, but it couldn't hold as support. Once this pushed through, this resistance here became support, but we lost it again. We pulled back, and once we got below this level, this went from being support to resistance. And now we go back and we try this again. We try to push this level again, it's resistance. We get rejected, we come back, we bounce off this support, which is held as support here, and we try again. And this time we gapped over this and pulled back and closed below it, but then the next day we opened, the next several days we traded on this support and then finally pushed off. But this is a classic case where resistance at one point became support. Became support here, we lost it, became support here, but then held as support, continued to hold as support. And this is a classic example of what we're talking about. And we see this intraday, and we can trade off of this. You know, these are the breakouts that we look at, and this will look the exact same on an intraday chart. All right, methods to establish support and resistance still. This is another method, and this is just the opposite. Resistance equals support. It's just the opposite. As the price moves up to resistance, it changes a supply and demand. The breakout above resistance proves that the demand is like stronger. And if the price comes back to this level, it's going to be an increase of support. And it's probably going to move off. And that's what we saw, you know, here. Exactly what we saw. Where this resistance became support and it continued to be support. And then eventually, you know, we kind of broke out of this. All right, now the trading range. This is another way we can establish support and resistance. Trading ranges, they play a very important role in determining support and resistance. A trading range is a period of time where price moves within a tight range. The signals that forces a supply and demand are evenly balanced. That means we're just trading in this range and the buyers or sellers can't push it, you know, in or out of it. When the price breaks out of that range, above or below it, then that sign signals that we're having a breakout, and it establishes a level of support if we're going to the upside, or it establishes a level of resistance if we're going to the downside. All right, so let's take a look at this chart. This is the same chart we've been looking at. And here we've created a zone where we've got support here twice, it's been tested. And here's the resistance that was tested. We just couldn't get out of the zone. Then pop, here's the zone. We popped it right here. We pulled back. And then we can't seem to get away from the zone. And then eventually we got to move up. We broke out of it. So this could actually create another zone. This just opened this zone up a little bit. Or we can have another zone here. Here and here. And this is where we popped through it. And this level became support. I think I've got a chart of that here. Yeah, here we go. This became this, and then we could have drawn another level, a line here that could have been this zone. We could have created another zone here, and then once we broke out of it, once this gapped up that day and broke out of it, you know, here's the breakout. So we can look at zones as well, and a lot of times I use this in my swing trading. I'm looking at stocks to break out of a zone like this and then give me an opportunity for, you know, a swing trade, especially if we're making new highs at the time. All right, and this is just these levels outlined again. All right, because technical analysis is not an exact science, it's useful to create support and resistance zones. Okay, and what I mean is when I mark a level on my chart and I make it this particular price because that marks the top of a candle, I'm not looking at that particular price. And I know we focus on stocks hitting the exact price or to the penny. You know, it happens sometimes, but it doesn't happen often. And we don't need to expect that, because if we expect it, then we're not going to be very successful. We don't like to go in to top and bottom tick stocks. So I look at it as a zone, because this isn't an exact science, which is why we do lose 30% of the time, because it's just not an exact science. Each stock has its own characteristics. If you've been trading long enough, you understand that. Each stock has its own characteristics, and you have to analyze each stock based on its own characteristics. So if you're unfamiliar with the stock that you're getting ready to trade, that's when you should not trade full size. Get to know the stock, get the feel of it, and then take it. Now, you see what happened to me this past week on Tesla. I'm not used to trading a $300 stock. And you know, I did win, you know, get some winning trades on it, but overall I lost on it because I didn't understand the characteristics of it. And one day it made a $5 swing, and I wasn't ready to deal with that. I didn't understand that these stocks can make $5 swings and still go and make the move. It made a $5 swing and then moved $10. And I didn't understand that, but luckily I was in with smaller size, so it didn't really hurt me. And I couldn't go in with big size because it was a $300 stock. But just, it could have been any other stock. It could have been a $50 stock, and I put 500 shares on it. And I wasn't real comfortable with, or didn't understand the characteristics of the stock and how it moves and how it reacts to the market. You know, X is one of those stocks that you hear me talk about in chat that I had to get a feel for X. The first couple of times I traded it, it took me to the cleaners. But I learned its characteristics and I understood what I needed to give it in order for it to work. And so now when I trade X, I make money on it. Generally, the tighter the range, the more exact the level. If the trading range is more than 2 months and the price range is relatively tight, then the more exact support and resistance levels are going to be. If a trading range spans many months and the price range is relatively large, then it's best to use those support and resistance zones. Now again, this is based off a daily chart. If you can use this on an intraday time frame, you know, if the stock is trading in a zone for a couple of hours and the price range is relatively tight, then the the support and resistance zone doesn't have to be that wide. It doesn't have to be 10 cents. You know, it could be 5 cents. So you're basing what you do, the zone that you give, on the range that the stock is trading in. You know, and this is really meant as a general guideline. In each trading range, you got to judge it on its own merits. And that's why it's so important. That's why I think we as independent day traders or retail traders, we do have an advantage because we can analyze these things. You know, we may not be as quick to react, but we have the ability to sit here and analyze and depict the emotion that's going on in the market. And once we learn how to do that, we're going to be consistently profitable every day. All right. So to wrap it up, we're going to wrap the day up here. The identification of key support and resistance levels is an essential ingredient to successful technical analysis. Even though it's sometimes difficult to establish exact support and resistance levels, you have to be aware of their existence and location can greatly enhance your analysis or forecasting abilities. You just have to be aware that you're going to have to be able to read price action as well. You can identify these levels, or you can try to identify these levels, but if the price action does not support what you see or what you've identified, then it's probably not a significant level. And that's why I was teaching you, last week, trying to get you to read and trade on a clean chart so that you can learn price action without any other inputs. If you learn price action and you learn how to read when you hit supply zones, or when there's probably going to be a change, or there's a potential for a change in direction, and you couple that with your ability to use technical analysis, you're going to be on point. You're going to make money. If a stock is approaching an important support or resistance level, it can serve as an alert to be, aware to look for signs that's going to increase buying pressure or selling pressure. And that's where you're going to find the reversals. And this is where I use this to determine my reversal trades. This is why I do not trade a reversal unless I have a clear area, a clear zone of support or resistance. If I don't have it, I'm not trading it. And that's not to say that the reversal is not going to work or that it's not going to come, but I'm not going to waste my time trading something that I don't feel has a 70% chance of going my way. It's got to be, I'm going to have a solid advantage before I go in and take the trade. Now, if a support or resistance level is broken, it signals that the relationship between supply and demand has changed. If we break into the upside, that means demand has gone off the charts and the supply is thin. And vice versa. If it goes the other way, that means the demand has gone away and you've got a lot of people coming in wanting to sell it. And so they're just going to drop the price until they can get rid of whatever they got to get rid of. Okay, a resistance breakout signals that the bulls have gained the upper hand. And a support breakout signals that the bears, or breakdown, I'm sorry. Resistance is going to be a breakout. A support break is going to be a breakdown. And that means that the bears are in charge. And then we're probably going to go lower. Alright, so we're going to take some questions here. I know I went over about 15 minutes in this class, but I wanted to get all of this covered today so that next week we can start getting into applying these to our trading setups and how, I trade the market using this technical analysis, that we've been sharing the last couple of days.